I'm not going to say earnings don't matter, but earnings probably don't matter. It's the guidance certainly that matters. What is the most closely watched one or two metrics that you and your team will be paying attention to this week?
You know, it's the earnings forecasts are quite pessimistic. So we're looking, generally speaking, at how numbers come out relative to expectations. We're asset allocators, so we look 6 to 18 months forward. And the key question right now is we're trying to sort out is, are stocks overvalued? We end up neutral between stocks and bonds. And look, it's easy to think that stocks are in a bubble because they've run up 40% from the bottom, but the earnings forecast, and this is what we're watching this week, are for 45% year-over-year drop. So it's all about the push and play, the push and pull between what are good fundamentals but extremely high valuations for growth stocks, and then cheap valuations, almost like a coiled spring for value stocks, but pretty poor fundamentals. So we're sorting through that.
Well, small caps don't get a lot of attention because they're small and they're not named Facebook, Amazon, or Netflix. But are they the best domestic U.S. value sector right now?
It's interesting because if you look at small caps on their own, they look expensive relative to history. And here, this is where the earnings numbers are very hard to interpret, at least in the short run. But if you look at small caps relative to large cap, they're actually at an extreme in terms of how cheap they get. Again, relative to large caps, we're talking 98th, 99th percentile in terms of how cheap they've been over the last 15 years. So when we look at small caps, we look at an asset class that is the asset class of choice historically coming out of a market bottom. And 9 out of the 10 last market bottoms, small caps have outperformed coming out of the bottom. They have not this time around. So it's these coiled springs, these valuations that are at extremes. And it's the same for value versus growth. And then the key question for asset allocators is, are we going to see some sort of rotation into more cyclical stocks? The way we're playing it is to neutralize our stocks versus bonds allocation, but then add cyclicality under the hood. So we end up with an overweight small cap position in this market. It gives us optionality from a 6 to 18 month horizon for a recovery trade.